Hello, trading is closed on June 3rd, 2021. Let's do our disclaimer, go over yesterday's calls, and see what I think might happen tomorrow. This is my trading plan for tomorrow, June the 4th, 2021. Trade at your own risk, because I can be completely wrong. Please follow the rules of my channel. Tell your friends and click like if you like it. Didn't really make a prediction for today. We said we had everything we needed for a big drop yesterday, and it didn't happen. Well, the pattern doesn't really end at yesterday's close. It ends at today's open. So we did get the big drop, but I don't like to predict that, because if these things fail, they fail in grand style. So I got what I wanted, but not when I wanted it. And yesterday there was no call, and no call means no call. Now, we did have some old targets which printed 41.97.58, 41.87.96. So we crossed those off the list. We still have one target from last month, an ultimate target, 41.37.91. Ultimately, it should print, but there's no time limit, and nothing requires it to print tomorrow. Here's what we said. We had lower targets. Nothing requires them to print. And the fact that we didn't have the drop I was expecting yesterday is actually positive. But of course, gapping down at the open gets rid of any positivity. That's a standard rule. Well, this is the pattern with the early high. Tomorrow has the early low. Let's go over what MEJT had to say first, and then see what this pattern tells us about tomorrow. In the afternoon, MEJT gave an ultimate sell signal, telling us ultimately prices would go lower. It also said ultimately prices would trade higher, which they did. Normally we'll get more than this, but we don't have to. In fact, we got the target immediately. And this move is called false. So it said that we would retrace to this area. And that's all happened. So those have all played out. Well, normally this pattern either is a rally into the close with a new high, or a straight line drop. You could argue that's a straight line drop. It certainly is, so you don't have to get more. But usually, not always, when there's a straight line drop like this, you get follow through. And there really was no follow through here. So I think the odds are pretty good, not a guarantee, that we're going to resolve this situation tomorrow, either by getting the standard rally up here to a new high, or following through, probably undercutting that low. And the fact that we have the non-farm payrolls coming out, which can lead to a big move, is compatible with that. I don't like to predict the response to the non-farm payrolls report. I think it's really too event dependent, but let's look at one possibility. We still have this as the count. If this is wave 3 down, and we don't know that yet, you really want to undercut some of these lows. If that's what it is, you should be able to divide it into a 5-wave structure. I mean, this could be just A of 2. You don't know. Well, here's the 30-minute chart, and if that's a 5-wave structure, for now at least, it's pretty hard to see, but I can do it with some effort to switch to a smaller time frame. This is a little bit of a force count, but it breaks no rules. You can call this 1, 2, 3, 4, 5 for 1. You can call that A, call that B, the fibs all work. And if this is AB, and we get a C to 4209.15, you'll have gold C having a fib relationship to gold A. You'll have light blue C having a fib relationship to light blue A. And at 4209, you'll have a 61.8% retracement of this whole drop. So if, and that's an if, we gap up and hit this price and then reverse, it'll make a pretty picture. Then you should start a big wave down. But just because it makes a pretty picture, that doesn't mean it's the only thing that makes a pretty picture. We'll just circle this number and we'll see what the market opens at tomorrow. And if we start to drop from this price, we'll believe it. But we're not going to say that has to happen because it's pretty tough to predict what will happen when the payroll report comes out. Well, tomorrow's pattern has the early low. Doesn't mean you won't gap up. Today's pattern didn't have the typical rally into the close. You could argue we had a straight line drop early, but there tends to be follow through, and that didn't happen. The odds favor gapping smartly at tomorrow's open to resolve the situation. The non-farm payroll report makes it difficult to predict with confidence the direction of the gap. One possibility, and I'm stressing it's not the only one, is a gap up to 4209 followed by a sharp reversal. It's hard to get sharp reversals on Fridays, and I'm acknowledging that's not the only way in which things could play out. I think the open is going to clarify the picture. That's just one thing we'll look for, but I'm not risking money on it at this time. It's the pattern with the early low, strong resistance right when you come back and fill this hole in the wall gap. Don't forget, I didn't mention this, but this is a hole in the wall gap, and there's resistance right at that point too. I mean, everything fits if that's what happens. You get resistance right at the top of the wall. So if we hit 4209 in reverse, it'll be very pretty, but I'm not going to guarantee it's going to happen. Tomorrow has the early low, and that is today's call.